अशोक जी स्टार्ट करो।
करते हैं सर 2 मिनट। Good evening, friends. I, CA Ashok Gupta, on behalf of Northex CA CPE Study Circle, welcome you all in today's webinar, which is on a very, very different and very interesting topic, that is Code of Conduct, Professional Ethics for Chartered Accountants and Regulatory Risks on Professions Chartered Accountants. An overview, and it will be taken. I welcome CA C V Sajan ji for this webinar. Welcome, Sajan sir, with a virtual bouquet of flowers. Welcome, sir.
Thank you.
Welcome, sir.
And I, along with I have also got my deputy convener Rajesh Roda ji, my past convener Arun Gupta ji, and coordinator Devinder Singh ji with me. I would like to read a brief profile, which is just a 2 lines he has given me. But everyone knows C V Sajan has 30 years of standing as practicing chartered accountant. Is known for helping fellow CA chartered professionals in litigations related to disciplinary proceedings. Welcome, sir. Please.
Welcome, sir.
Please guide us on this important topic, that is Code of Conduct and Professional Ethics and Regulatory Risks on Chartered Accountants. Welcome, sir. Thank you.
Thank you. Good evening, friends. Arun ji, Ashok ji, Rajesh ji, and I think Raman is not in the screen, I suppose, and Devinder, all the office bearers. First of all, my sincere thanks to inviting me to this program. When I was asked what should be the specific title, I said regulatory risk associated with the profession. Most of us must be aware that in the last winter session of the Parliament, CA Amendment Bill 2021 was placed for the consideration of the Parliament. The last significant amendment to the ICA Act was in 2006. Thereafter, there were 2 minor amendments, but this one proposed by the government or by the ministry at the recommendation of the Institute Council also has significant legislative changes that are proposed. So we may, as professionals, wonder why there is a necessity for revamping the law. What is wrong with the law as such? Every law requires changes with the times. And in our country, there has been significant developments in matters related to legislations, business environment, and the way economic activities underwent changes in the last 15-20 years. Our country has not been alone in this. World over, there have been changes. We may recall that in 2013, when the Companies Amendment Act came, National Financial Reporting Authority concept was brought in. That also was something new to us, because till then, ICA was the sole regulator of the chartered accountancy profession. Now we have got regulator, in fact. People who were critical of that were drawn attention to changes brought in the American law also, where they brought a similar supervisory body over the audit companies known as PCAOB. So these changes suggest that lawmakers and bureaucracy that runs the government feel the necessity of tightening the controls over the auditing profession because they have a perceptual difference that perhaps the profession or the auditors are not discharging their functions properly. This is the underlying thinking. In common parlance, what we say is expectation gap. What the auditors perceive as audit and what the auditors do, and what the authorities expect from the auditors. There's a perceptible difference. And to reduce this gap, what the authorities are trying is bringing in changes in the law and regulations. We call it a top-down approach. I don't know whether this approach is going to help the situation. Bringing qualitative changes, the way audit is done is the primary responsibility. Now, in India, we have chartered accountants doing multiple roles, and we have heard government authorities complaining that even in tax compliance and collections, increased role of professionals was expected. You may recall in 2016, we had a significant action by the government of denotifying certain currencies. And thereafter, in 2017, there were criticism against the CA profession without directly hinting at what specific deficiencies were. But we in the profession understood that government was critical of the profession. It is not to pinpoint anybody singly. Every criticism has to be taken with a positive note. If there is room for anybody to raise fingers on our profession as a whole, each one of us in the profession has to take note of it and introspect why these kind of criticisms are happening. I'm saying all this background because code of ethics is a topic that is learned as part of our curriculum. And the members are aware about the regulatory requirements. However, recently, the institute decided to bring this topic, as a matter of continuous professional education, because there was a feeling that the profession is not imbibing the spirit of the code of ethics in their regular functioning. More and more laws are coming, more and more restrictions are coming, more and more actions are happening against chartered accountants. Our profession has a unique distinction. In other academical qualifications, once you have qualified as a professional, you are supposed to be a professional for the whole lifetime. A doctor is a doctor, an engineer is an engineer. Nobody is going to take away the degree from them. But in our case, after qualifying, we need to enroll ourselves as a member. And then after that, enrollment is only temporary, which gets renewed year after year. And the institute has the sole authority to direct you. And if you are a person involved in a disciplinary matter, there is a risk that your membership as a CA professional can be lost. In 2021, I think nearly 40 members have been removed, some for longer terms, some for shorter terms. Regardless of the period for which they are removed, it is a taint on them. Imagine the plight of a chartered accountant qualifying as a CA. Each one of us understands the pain of qualifying as a CA. Somebody who has got a temperament of working so hard to qualify as a CA would not do something stupid to lose his recognition as a CA. Yet, we have a very tough system of monitoring, because of which, to give a message to the profession, the institute as a regulator comes heavily on the members wherever they find them at fault. For a person who is a victim in a disciplinary matter may not feel that I have done something wrong. However, for the institute as a regulator has a responsibility to see that every member upholds the value of the profession, the glory of the profession. That is the reason, even today, regardless of the criticism from some quarters or others, our profession still has a lot of dignity and respect. So for those at the receiving end, yes, it is a bitter pill. However, we as professionals must always be alert. What are the risks that we are facing as professionals? Is there any significant difference in the risk perception? Now, when the new law comes into force, it would be all the more difficult. Till now, if a chartered accountant is found erred in something or other, it is he who is only responsible. If that person is a partner in a firm, other partners may make him understand to leave the firm so that the firm and other partners do not get affected. But now the new law is coming where the whole of the firm can be charged, because earlier there used to be no law to act against a firm. Whether this is necessary or not is a matter of debate. I'm sure the parliament also would be debating it. Members also would be giving their responses to the draft bill to the government for the consideration. But why this new law, legal provision is coming in, that is what is very important. Because there is a perception that the firm name and the firm's construction in itself plays a big role. And therefore, if at all, deterrence against wrongdoing by CA profession is required, ends of justice would not be met unless it is done onto the firm. That's a change of perception. For the last 70 years, such a perception was not there. Which means earlier, individual acts were considered as responsible. Now, collective actions are considered as responsible. What are those things that are to be kept in mind? I have identified the risk into 4 heads, mainly. Client-related risk, regulations-related risk, competence-related risk, and accountability-related risk. It's my own perception. Client-related risks have become very serious these days. If we see, once in 10 years, business dynamics, business models, and nature of businesses undergo significant changes. Now, look at the current scenario. There's a surge of companies going for taking benefit of the startup culture that's coming up. A number of technology companies have sprung up in the last few years. The last 2 years' experience has given opportunity to enterprising people to start new technology setup. Now, every one of them would be requiring a chartered accountancy profession. So therefore, young members in the profession would be exploring the opportunities also. But accountability for us is for a long time. Now we would grab the opportunity. Young members particularly, they're just looking for opportunities to get their exposure. But in Indian situation, we must be aware that if anything goes wrong, the downside or the risk side, investigations, inquiries would happen after 5 years, 6 years, 7 years, sometimes 10 years. In our eagerness to get a new client, if we compromise on doing the basic KYC of a client, if we do not try to understand the legality of his business, if we do not try to understand the business model used by him, then what happens is, after a few years, when inquiries happen, what was this company doing? Who were these people? What was their track record? Did you know about them? Did you verify their veracity, past track records? Such questions come up. Those people can vanish. You cannot. So the antecedents of businessmen, whether did they come to a particular new business venture with clean hands, or were they just exploiting a particular opportunity? There are hundreds and hundreds of cases that are going on against bank defaulters. Now, these cases are investigated by CBI Special Cells, Economic Offense. And along with the partners or directors or promoters, chartered accountants also are in talks, because they were the ones who signed the balance sheet. They were the ones who helped the entities to raise the money. And now, if they have failed in repaying the money, and if the banker is complaining that no, they were doing something fraudulent, which we came to know later, chartered accountant is summoned by authorities to ask, did you not know this? If you say, I did not know this, then the institute would not spare you, because you are supposed to know it. These are basic lessons. So, large number of chartered accountants are facing this risk of tagged with criminals for no fault of them. No CA would involve with a criminal knowingly. But people with dubious records would always explore and exploit the youngsters, because they know that the young members of the profession are looking for jobs, opportunities. And they just see the opportunity and they grab into it. Fabricated records, fake documents, addresses that are created just for the sake of getting some registrations and approvals. All these are very common. So background check of the client is very, very, very important. Similar is the manner in which they do the business. What is the business model? Recently, somebody asked me, my client is in Bitcoin. I simply laughed. I said, look at the profile of the person who is doing the Bitcoin business. Now, for the last 3-4 years, it was in darkness. Now, government has made it taxable. People think that, okay, it is legitimate. No. Gamblers also are taxed. Unaccounted income is taxed. Taxing doesn't make anything legitimate. And if the person is involved in money laundering activities or anti-national activities, the CA who is attaching the balance sheet would also be responsible. when the GST Act came into being, there was a rush for claiming inputs. All sort of allegations came up. There have been a number of cases where chartered accountants were involved. We don't know yet whether those allegations that we saw in the paper against CAs are right or not. But the fact is, opportunities were given to the authorities to suspect. We, as smart, educated, responsible professionals, are not supposed to give even slightest of the opportunity to the authorities to doubt about our integrity. We cannot let our caution, our skeptical approach to be dropped. Related to the client risk, once you have thoroughly understood, yes, I am getting into association with a client whose credibility is not in doubt, whose business model I am aware, and if someone raises questions about his business, I would be able to answer that. Then the next point that you have to understand is the documentation part of your association, the appointment part. These days, we engage in multiple assignments. If you are associated with a company as a statutory auditor and also is engaged in some other advisory services, consulting services, please make sure that your documentation is complete so that no one raises questions on what capacity, in which capacity did you undertake this job or that job. Even if the appointment letters issued by the entities to you are not perfectly drafted, or they have room for ambiguity, the institute says you must clarify it by issuing an engagement letter to them. Please issue and make them realize that this is a job I am doing for you. So, if it's a company, of course, we all are aware that the company law requirements of appointment, qualification, eligibility, declaration, all those things are applicable. I don't have to repeat that. But even in a non-company situation, our institute is very strict so far as the appointment aspect is concerned. You all are familiar with the clauses 8 and 9 of the first schedule. Breach of these two clauses invite charges of professional misconduct. We must remember why these two clauses. Because there could be agreed with people about your appointment as a chartered, as a consultant or as an auditor. If they are aggrieved tomorrow, you should not be embarrassed. You should be able to confidently demonstrate that, yes, I was appointed and these are the documents with me. I was qualified, I was eligible, there was no disqualification. Also, we have a provision that people, clients who are clever might try to get rid of an inconvenient CA by appointing another one. The regulations do not stop any client replacing a chartered accountant with another one. That is not the intent. However, if a client wants to get rid of a chartered accountant because he has been doing his job honestly, and if a new chartered accountant wants to be placed in his place for a compromised position, that would not only affect the person who did the job honestly, but also the profession as a whole. More than that, the new member who is very anxious to get a job or an opening would be exposing himself to risk from which he may not be able to rise. This is the reason the profession requires every new incumbent, before taking up the job, to communicate positively with the previous auditor. He is not asking any no objection certificate. The outgoing person doesn't have to give any no objection certificate. There is no such provision. The only provision is what? Communicate with him and ask him, are there any reasons for me not to accept in your view? Are there any reason for me not to accept this job according to you? This is what you're asking. And the outgoing person would say, in my view, I don't see any problem. Or in my view, I was doing my job well. I don't know why they have removed me. And these are the things that happened. You may please factor into it. The outgoing auditor cannot say, no, I don't want you to take up the job. No. If he has not been paid, he can say, I have to be paid. Please get the money for me. But the outgoing person cannot say that, no, I should not be removed. I should not get out of this. You should not take it up. No such things. But the outgoing auditor should say, look, man, these are the situations because of which I am out. Now, if the client is thinking of appointing you and getting compromises from your side because of these things, please don't do that. Also, ask him to pay more fees. Then the industry, the business would get a message. Yes, by changing a CA, I don't stand to earn anything. This is what is the objective of the regulation. Now, my young members would ask me, where is the room for all this? We are struggling to get jobs. We are looking for opportunities. Do we have so much of luxury to take into account this? If there is a will, there is a way. Someone who is rushing to you to give you a job without you ensuring the necessary compliance requirements wants you to compromise. Once you compromise, you are compromising for life. Because the way you begin your career, the way you create a name for you is what is going to give you respect and money. People, professionals who compromise on their ways, who are willing to go to any level to accommodate the client, would be the losers because they don't get respect. If you don't get respect, you don't get payment. So therefore, my friends must take into account the risk with regard to the client very serious. When clause 9 of part 1 of first schedule says that the incoming auditor has to satisfy himself that the appointment requirements are being complied with, please call for the records of the organization. If the company is small and if the company has not done the necessary documentation, assist them, make them realize, create documents and get it on your records. Because you might require these documents after 4 years, 5 years. There was an interesting High Court judgment of Karnataka High Court, where an auditor, outgoing auditor complained against incoming auditor, and the institute had its own decision. While discussing the matter, the High Court asked two questions. If the appointment was not bad in law, can the new auditor be held responsible? The answer was appointment may not be invalid, even if there are compromises on the part of the company. So company management, company directors, company's appointment of the new auditor, everything is in order. The second question they asked us at the same time, but the auditor who came in did not examine the correctness of these documents. Should he be held responsible, guilty for professional misconduct? Answer is yes. Why? Because Institutes Act, the first schedule, specifies that an incoming auditor shall ensure that his appointment is validly done. So this means, regardless of the fact that the company has not complied with the provisions of the law, and the company is being spared by the authorities, including ROC, the auditor has not been spared by the institute. This is a harshness with which we have to face our disciplinary mechanism. That's a risk. The other third risk which I would like to say with the client risk is communications with the client. These days, we see lots of disputes. And after 4 or 5 years, when somebody raises this question, I was not aware about this, I did not know about this, etc., etc. Now, you contact a company or a partnership firm, you deal with one partner or two or one director, they provide you with everything, you rely upon that, you do your job, you move on. After some years, there is a dispute, and the other partner is saying, I was not party to this, I was not aware about this, I didn't know about this. Those things invite a lot of headache. And substantiating that point of time that, look, I had relied upon his version. After all, this is a company, there is something like indoor management. You can keep on saying all this. Defending and standing yourself as a defendant, it's a tough, painful journey. Therefore, you need to be proactive. You need to know that anytime there could be some kind of disputes. Who knows what is going to happen? Even within the family, it happens. Amongst partners, directors, shareholders, stakeholders may come. So any and every decision taken by me, be it regarding the finalization aspect, the approval aspect, or certain decisions that have been taken, am I in a position to substantiate that I had done my job? So that means written communication with clarity would be a saving grace for you. Otherwise, you would find a lot of challenges in substantiating to people who are criticizing your job that I did a reasonable job. Compliance failure. Of course, as part of audit, we may be doing it. But remember, when there is a compliance failure, which would be examined by the regulators, authorities, an income tax department or a GST department or an excise department, the way they approach is different. And they use all means of investigation, including coercion, duress, force. And a vulnerable businessman would spill the beans. He would admit that I did this knowingly, I did that knowingly. Imagine about somebody admitting to authorities after 6 years of your audit that he did something willfully, wrongly in those years. And with that statement, the authorities would summon you and say, look, he has said this. Did you not know this? So far as the non-compliance part is concerned, the illegality in it, the possible illegality in it, the remoteness of the possibility that this could come as a question must be captured. If I was talking on this subject 10 years before, or maybe 7 years before, I would not have been this emphatic on these subjects, because even myself have been considerate. But now, what I'm experiencing is what is making me to say all this. Authorities are putting chartered accountants on dock for the errors and omissions of their clients. We might ask, what is our fault in this? They would say, you are part of it. It's a conspiracy. Arguing that my professional responsibility was limited to this only would not help you, because the volumes of documents we have to use and rely upon comprehensively cover our responsibility as watchdogs. We are a bridge between the stakeholders and the management. We have to be unbiased to both. This is what we call the independence. When we consider this fact that we are paid by the client, then should I not be kind to him? You can be decent to him. You are paid not for allowing him to do inappropriate things. You have a statutory responsibility. Even while filing an income tax return, you could be held responsible these days. Authorities are making the chartered accountant accountable based on the IP address used for the filing of the return. And they say that this is a reverse case of vicarious responsibility. You did everything except his digital signature. So times are changing significantly. And this consciousness should be upon us. The increased rate of non-performing advances in the banking sector is another challenge. I don't think when people borrow the money, anybody thought of not paying it back. At least in the last 15 years, the business atmosphere in our country has not been that favorable. And therefore, many of the borrowers had to defer the payment or servicing of the loans. Some, of course, were unscrupulous, but not all. But after all, a banker who was given money, if he does not get the money back, he also has to save his skin. So he would like to put the blame on some others. And if you dig into any borrower's file, you would see a couple of certificates issued by a chartered accountant to support the client to get the loan. Be mindful, those certificates can really create problems for you. I'll talk more on the certificate part, on the competence risk part. So far as the client risk is concerned, I would like to say two more small things. The multiple assignments that you take. There shall not be any reason for anybody to raise fingers on your multiple roles, asking questions on your integrity as a professional, the one who attested. Companies Act 2013 categorically brought disqualification of other services. Even before that, we had our guidelines restricting on so many activities. All of them had only one interest: independence of the auditors must be safeguarded. You must have done the job perfectly. Somebody who wants to find fault with you would not find anything in your audit report. Yet, if the independence is not appeared to have been demonstrated, whether you have acted independently or not, the appearance also is as important as that. Therefore, there shall not be any conflict of interest, any conflict of interest. We don't have to go to the detailed text of the code of ethics on this. It's all common sense. No financial interest, no contractual interest, no family interest. Take the principle. Then you don't have to refer to the guidelines. Guidelines are required only when you want to break the rules. If your interest is to comply with the rules, then the spirit is to be imbibed. And the spirit, if it is in your mind, then you would not keep that much closeness with the client. Over dependence on a client is very risky these days. Similarly, also be aware that you can be attacked by a client. A client whom you served for a long time, whom you helped to rise up, can turn his back on you. Times have changed. Everybody would look for his survival. So therefore, the client-related risk that I have discussed, I have given a lot of importance to this because in our eagerness to serve the client, we compromise on ensuring that tomorrow, if something goes wrong with this client, with his business, or with the relation with him, or if some authority, correctly or wrongly, puts that person into an inquiry, would I be subjected to any questioning? Would I be able to substantiate this? Earlier times, documentation, creating big files and bulky documentation was a challenge. These days, digitization is helping us. So the new ways of documentation would help us cementing our systems. Now let me come to the competence risk. We have in our second schedule, first part, clauses 5, 6, 7, 8, 9. Clause 5 talks about non-disclosure of material facts known in the financial statement. Clause 6 talks about non-reporting of material misstatement. Clause 7 talks about gross negligence or not exercising due diligence. Clause 8 talks about not collecting sufficient information for the purpose of the attestation. And clause 9 talks about departure from the accepted auditing practice. Now, all these charges of professional misconduct are to do with the competence of the profession. What is stated are generally, these kind of offenses are not done by people knowingly. That's my belief. Professionals do not knowingly commit such mistakes. If somebody rarely has any wrong intent. That's a different point. I'm not talking about those exceptional situations. Generally, chartered accountants are charged for gross negligence and other aspects that I have spoken about because they were errors of judgment. They failed to recognize the importance of the point that now they are questioned about. So the point is, why these charges are imposed on professionals. As qualified people, technically we are sound. We have regular CPE programs. We have additional certification programs. Capacity building measures by the institute are very respectable. And beyond that, we have so many WhatsApp groups of the professionals discussing. So dearth of knowledge is something hard to believe. So if knowledge is not a problem, then why these kind of issues come up? If knowledge is different from competence. Competence is all about communicating your knowledge effectively, executing your knowledge effectively, reporting your knowledge effectively. I think there is some gap in this. That is the reason large number of professionals, particularly I've seen senior professionals also. Here also again, the crux of the problem is the way small and medium practitioners have been doing their profession. Because there was a perception that if I have seen things, I have satisfied myself, and then I have attested it, then why should I be questioned? This used to be the perception. But now, times have changed. You might have examined a matter as well. You might have satisfied yourself, and your report also correct. But if somebody is asking this question to you, how did you satisfy yourself? Can you substantiate that to the person? That is the question. The other day, I have received a panic call from a member in one of the border states, border towns rather. And he said, I have done my job very well, but they are asking me to provide a working papers according to SQC1. And the notice says that SQC clause so and so says that working paper means this, working paper is like this and this and this. So please provide that. So he was wondering, I have been maintaining working papers for more than 35, 40 years like this. Is it in compliance with SQC? I don't know. What all things I am supposed to give? Okay, that part is addressed. Then comes the next question on the point of inquiry. We have this inquiry. Please clarify with respect to your working papers filed with us. How did you examine this? Now, first, the investigators ask for the working papers. They keep that in the custody. Then they expect you to explain from there, how did you examine a particular element in the balance sheet? This is the way investigations happen. In such cases, you don't get the opportunity for the second time once your working papers are already with the investigator. Therefore, your working papers must be complete in all respects. The problem we have is we have to follow standards of audit and guidance notes. These documents basically are principles. They are not rules, they are principles. They give broad ideas. Then from those standards, you need to have your own judgment. What is ideal for me in this case and that case? This is what is competence. Now, this competence comes with the age, with doing more and more work, experience, guidance of seniors. One problem with the profession is young members. Why I'm emphasizing on young members is because I am seeing large number of young members getting entangled in the disciplinary matter. And their life gets ruined. That is why I'm focusing on young members. Without having sufficient experience, they undertake jobs. And when they encounter these kind of questions, then they perplex, they falter. SA 500 or 505, or for that matter, SA 230, the audit documentation standard, they have given broad principles. SQC have given more or less clarified position. But in practice, I would not say that you have to go by the textbook and go by the textbook and tick and everything. No, that's not what I mean. What I mean is that if when you do an attestation work, always be mindful of this, that any day, anyone can ask me this question, how did you satisfy yourself? Which means I have to answer that. So what were those things that I examined? What were the focal points that I have zeroed in? Who did the job? When was it done? Which all documents were relied upon? What were the points of inquiries you shortlisted by you? What were the response from the management side? Which are those documents? Where are they placed? On weighing those responses, how did you conclude the matter? Then what was your judgment? And that judgment is the basis of judgment that you define and report in the audit report. And if the basis of judgment, of course, if it is clean, it's a clean report. If it is not clean report. That's it. Expectation of the authorities is in this manner. how many in the profession are able to perform in this manner is the point. If it is not happening, why it is not happening? Multiple reasons. A small job with the peanuts as fees, you can't spend so much of time for that job. You cannot deploy more people on that job. So small job, less fees, compromise on documentation, compromise on quality. So it's a vicious circle. But if your focus is on risk management and to grow slow and steady, always towards upper trajectory, then you need to be very pragmatic. You cannot compromise on quality and move on. For competence part, the first point I would like to say is collection of evidences and preparation of working papers and internal notes that justify the reports are very crucial these days. And try changing yourself. There are certain areas where we have real difficulties: related party transactions, segment reporting, contingent liabilities and provisions, impairment, employee benefits. These are areas where we face real difficulty because financial records presented by a client, a tally record, would not help you. And if the management is weak, or maybe they are not financially savvy, and if the company's accounting team is not competent, then you are all the more in trouble. But then making the management realize the deficiency they have and making them to pay for getting these things done, even if it is outsourced, and creating records properly is the way out, not in compromising with those things. And the beginning has to happen by making the clients realize it. I don't know how many members are able to get this respect from the client that yes, we are doing something for them. If the management don't realize the importance of, maintenance of records, compliance of laws, and all the pain is on the CA alone, then it is not worthwhile. Those times are over. Our profession has become technically onerous. ONEROUS means the benefit is less and the downside is more. Already it is onerous. Then if the client doesn't realize that, then it is not at all worthwhile. So far as the competence risk part is concerned, friends, I have to say that the recent developments of regulation compliance with the law has been a very important topic. When an audit client has not informed you about non-compliance of a particular law, or if the audit client has failed to comply with a particular law applicable to them, what is the auditor's responsibility? There have been a few instances where this question came up. Was the auditor required to report on this? Reporting requirements of an auditor, whether it is on the tax audit report or in the company audit report, they are governed by the relevant section. So if a particular aspect is not covered by those sections, am I supposed to report on that as an auditor? From a very technical point, the answer is no. However, we have a standard of audit 250, reporting on non-compliance of laws and regulations. Even in that, it does not say that you need to report about non-compliance of all the laws and regulations applicable to an entity. We may not be even aware of it. But the point is, have we taken an appropriate representation from the management as to what are the laws and regulations that are applicable to them? If we have not been given light about a particular law that was applicable to them, and we were not also aware, or the management has hidden the applicability of a particular law from us, then of course we can say that, no, this is of course beyond our duty. One thing is very important. Any law, the non-compliance of which resulted in a material misstatement, means the compliance of which would have created a difference to the profit and loss account or balance sheet, or the perceived requirement of compliance, forget about the compliance part, but the necessity of complying with it. If the company had rightly perceived the necessity of complying with it, it would have made difference to the P&L account or balance sheet. That is a case of material misstatement. Therefore, SA 250 squarely applies there. So in such cases, whether the management has hidden from you, concealed from you anything, or you are not aware about that law, these excuses can be very costly. That means, although there are saving clauses in the audit standard, as also in the legal provisions that are applicable to us as auditors, there could be trickier situations where an investigator can question your competence. Why did you not reckon this aspect? After all, it's a matter of common knowledge. I have stated about the other part, the clauses 6, 7, 8, 9, etc. No, you must remember, these days, balance sheets are made not only under the Companies Act or under the, or for a firm in general GAAP, but for special purposes, for presenting to the regulators or presenting to the foreign investors. Special reporting frameworks are used as per the requirement of the user. Now, if a client asks you to make a balance sheet for that purpose, naively you may do it, thinking that, okay, it is for that purpose. Now, we have special provisions for these kind of extra works. Or another situation is provisional balance sheets were given to the banker. By mistake, you signed it. But audited balance sheet was given subsequently. That was also signed. These multiplicity of documents can really create problems. This is another area of competence that I have come across. Professors do not try to differentiate sufficiently between the first and the second. And it gives room to investigators to misinterpret that these are double sets, duplicates, made different sets for different purpose, all wrong insinuations. The intent behind those different sets may not be dishonest, but if your intent was not presented in your report, in the disclosure, in the balance sheet phase, then they are susceptible to negative use. So if you are making a financial statement according to SA 800, Special Reporting Framework, and of course for SA 800 also, you may be using the same SA 700 audit report format with slight changes. So for uninformed people, they may look like similar. Even if the guidances in the audit standards are incomplete, you must be mindful. That is about judgment. After all, I said, audit standards are principles. You have to make them appropriate using your judgment. What are laid down in the audit standards are a minimum. Nobody stops you making more elaborate descriptive narratives where the user would get sufficient knowledge and they would be prevented from drawing adverse inferences. Provisional balance sheets, in my view, are not even supposed to be signed. And if you are, after all, constrained to sign it, then you should specifically disclose these are unaudited accounts and this is only compilation. And compilation is what? SRS 4400 agreed upon procedure. That's all. We are just taking it and putting it. That's all. We are not expressing any opinion on that. So it has to be very clear on that. The other day I have heard, somebody, we have limited reviews for the listed companies, etc. The peer-reviewed firms only can do that. And the guidances are very clear. But firms have not adhered to them properly. And for no rhyme or reason, regulatory actions are invited. Not just institutes, SEBI also is acting. All these are issues of competence. Communications with the management, articulations in disclosures, and the evidences of collecting these, informations on matters that are not directly available from the accounts. These all are very crucial. How do you know about contingent liability of a firm, of a company, of a firm? unless the management comes forward with information. After 3 years, if somebody is saying, why did you not report this contingent liability? And that time you are scrambling, where did I ask about this question? If you had asked specific questions on the litigations against the company, claims against the company, guarantees, or anything of that sort, and if they are given information, and then you have it in your record, I asked for it. I had no resources other than this to get it. Questions on third-party confirmation. These days, everybody is raising, you must collect external confirmation. It is not practical every time. And it is not necessary also. Experienced auditors can ascertain the correctness of the balances of third parties from the company's internal books themselves. And if the balance confirmations have been collected by the company or the client, they should be enough. You don't have to take the pains of collecting them always. If you can afford to collect it, that is very great. You must do it as a practice. I would advise you do it. But if you have not done it, how do you mitigate the risk of not having done that? Is the question. The risk management is collecting proper documents and making proper disclosure. When you report in audit, I have obtained all information necessary for my audit. It is not all information, brother. This is not received. So if it is not received, you write subject to these things. That is not going to affect your client also. If you have not been able to physically attend to the verification of the inventory, please explain that. Serious fraud investigation office summons chartered accountants. Their first question is, how do you do the audit? How do you do the audit? And professional colleagues fumble. I'll speak more on this once I come to the investigation risk or accountability risk. But from the competence risk part, I would say that after all, our expertise on GST, income tax, company law, all those things are not going to bring any glory to the profession because all and sundry can do this. But our attestation work is the one thing that gives glory to us. That is what is recognized as a core of our profession. Therefore, a financial statement on which a chartered accountant sign is there should never be criticized by somebody for absence of information, for material misstatement, or for a wrong audit report. We cannot dictate terms with the clients how they should run their business. But we can figure out whether the manner in which financial statements have been prepared did convey a proper way of functioning or not. I remember earlier days, intercorporate advances allowed by the company law naturally paved way for diversion of a lot of money from the company's funds to other entities. This is what is criticized by many investigators as siphoning away of funds or diversion of funds, particularly for real estate developers, etc. Now, someone who did the audit so that only as a transaction. This is a transaction. Is there any illegality in it? No, there is no illegality. Am I supposed to report in a caro? No, it is not required. But when criticisms arise, when authorities question you, they don't see from the angle of legality only. They see from the angle of propriety, morality, financial discipline, and abuse of funds. These are all angles of examination. So you are not supposed to see the financial statement from that transactional point of view. They must be watched holistically. That is why we have got SA 315 and 320 and 330, which talks about assessment of the possibility of material risk, material misstatement risk, measures to safeguard, and reporting of material misstatement. We have detailed guidelines. Material misstatement is not just about understatement of profit or overstatement of balance sheet or this or that. No. When funds are used from borrowed resources or stakeholders' funds are used for purposes other than for the one which is intended to, there are issues where the eyeballs of the auditor should pop up. That purpose is not achieved when we see audit from a transaction point of view. So the whole approach of audit has to change. This is the reason SA 705 and 706 and all changed significantly. They changed significantly because earlier there used to be no reasoning on the face of the audit report. Now in the last 3-4 years, we are seeing basis of opinion, basis of qualification, modification, and so on. Because the regulators are coming and telling us, please do this, do this, do this, do this. So we are guided every step, improve upon this, improve upon that. Where we fail to apply our mind, new regulations come, do this, do this, do this. How to write one line like this, how to make this document. It is all because application of mind is getting reduced. Where application of mind is reduced to get the job done, then they become procedural. Authorities would come and clamp more and more procedures. The more the procedure, the more complicated they are, and the lesser are interesting. And the cumbersome the procedure it becomes. So it destroys the spirit of the whole job. The whole process becomes troublesome. Certification risk is another area. We issue certificates at the request of the client. We have a detailed guidance note of 2016 revised. We must be aware what are the things that we can certify, number one. Number two, what are the contents that are supposed to be in the certificate? What are the things that we can certify? It is our ICA Act itself, Section 2 itself. A member deemed to be in practice for doing what all? You are not supposed to go travel beyond that what is a member deemed to be in practice supposed to do. And our jobs are limited to financial certificates and financial statement related attestations. Not the job of a notary public or not the job of a gazette officer. Beyond that, the certificates that we are giving must be for a specific purpose and only for that purpose. Collect an appointment letter for that, issue an engagement letter for that, and specifically disclose in the certificate whom are you giving it to, which was the purpose of it, and what are the facts in it. Certificate must be limited to facts that you have seen. Only facts, but you show it. Expression of opinion is in audit reports. In all of the cases, what we do is only fact check. We are giving that these are the facts that we have seen. It is to the other person who reads it to understand whether those facts should be understood in this way or that way. If a company says that I am going to raise this money for the purpose of this, you are nobody to certify that. You can say that I am provided with a project report, and in the project report, this is what is stated. That is a statement of fact, not your opinion. In both the things that I said, contents are same, but the manner in which it is presented is different. This is what is competence risk I am talking about. This competence comes with the age, experience, association with seniors, and fellow professionals. Young members standing alone, not having opportunity to discuss with others, and having seen sloppy works of others are susceptible to failure. Times are changing. Those who do well will have a lot of opportunity. Those who flounder will never recover. So I have not given more thrust to the process of audit or audit evidence aspects, because everyone is aware about that. I would only say that audit working papers do not mean bulky photocopies of tally ledgers and bills and vouchers. That's not. You are not required to collect tons of documents. But you should be able to substantiate to a third person that I have seen these documents, the details of which are in my working paper. Look at this Excel sheet. It gives each and every document that is there with the party's name, the reference number, the amount involved, the goods or services involved in it, who verified it, when verified it, in which file it is maintained. All those records are there in me. And this is created as a PDF file on this day, 7 years back. Are you going to disprove that is wrong? Prove me wrong then. This is what is working paper. The process that you entered into, the documents that you verified, that's what is working paper. As a sample, 2-3% of the documents, if you collect and keep in a PDF file, that is fine. That's okay. We are qualified to make judgments based on test checking. But are we allowed to give an explanation to an authority that, sir, I did on test basis. No. Test checking is our comfort. I may be able to gauge a sense of this particular audit by examining 2%, or maybe in some other cases 10%. For some others, it is 100%. It is all the individual experience and competence. So we have used the technique for examination. Does not mean that I can take it as an excuse if somebody raises a particular aspect and says that, why do you not verify this? You cannot say, oh, I did not see this because it was a test taking. No, you are responsible for that. So when we use our language, we have to be very careful about that. Friends, I have explained about the competence risk. Let me touch upon the other two risks also. Then I'll leave it to the audience to ask any questions because I'm already tired. The regulation risk. We have certain rules and regulations that are to be kept in mind always by every professional. Do not travel in two boats. If you are a chartered accountant in practice, you remain as a chartered accountant in practice. If you have interest in business, coaching center, trust, school, broking firm, investment arm, then you are susceptible to questioning by others. We are talking about the risk. Our institute has given general permission to do certain things. I'm not going to details of it. Most of you are aware, you have read it. Our institute also has given room for asking for special permission. And in certain cases, the special permission is given even while you are allowed to continue as a full-timer. In certain cases, they are given provided you become a part-timer with no articles and admission and all. Those are there. Those are rules. I would say take the spirit of it. Similar is the case of independence. When you are associated with the client, we have a guidance note on independence. We have the code of ethics that lays down principles. I'm not going to those texts. I'm just saying that conflict of interest can be a question. Risk element is there. When risk is there, you should guard. Otherwise, as a defendant, in an unfortunate moment, you will be at the receiving end. There are regulations regarding peer review certifications. There are restrictions on taking part in auctions. There are regulations regarding use of stationery, stamps, signboards. All those aspects are in our text. So I would not go into those details. One point which I would like to highlight is the structure of our firms and the internal disputes that create problems, risk, regulations. Remember to answer all questions of the institute properly. Remember not to keep the institute in dark about any aberrations. The branches, the people who are in charge, even if there are disputes among the partners and within the firms and all, try to keep the institute informed. Of late, there have been instances where article clerks have become offensive. The problem is when somebody complains against you, you become at the receiving end. And the complaint gets an upper edge. At the same time, if you have kept the authorities informed, then you can always say that, look, I had informed this. In quite a few cases where I have seen article clerks creating problems and all, it came out as if high-handedness to the principal. The truth may be something else. So we have strict regulations of the do's and don'ts. We must remember there is a clause in first schedule, part 4, as clause 2, lowering dignity of the profession. You are not supposed to conduct in any matter that would lower the dignity of the profession. Now, it's a very vague expression. In these challenging times, when would one become emotionally charged and behave undesirable is a question. It could be in your matrimony. It could be in a dispute with a third party. It could be a dispute with a client. It could be a dispute between partners. If you have realized the risk of this charge, lowering reputation of the profession, then the mindfulness of that is enough. It would make you behave. This is what is expected. Coming to the last aspect, the investigation or accountability risk. Whatever we do in our profession, they are tested by the authorities. The disciplinary authorities examine when they get information about any wrongdoing, or when they get a complaint against a chartered accountant. Beyond that, the police authorities, the regulators, other regulators, Serious Fraud Investigation Office, ED, Economic Offence Wing, CBI, all these people use inputs from chartered accountants in their investigation. Generally, when a chartered accountant is summoned by an authority, they are not summoned as suspects. They don't project that you are summoned as a suspect. They try to keep you in comfort also. However, the method of investigation, of course, is rigorous, uncomforting. Questions are probing, intimidating. That is part of their job. You have that risk. You face the risk of being interrogated by any authority. But the risk gets mitigated when you address that as a professional. Approach it very professionally. If you've done your job well, be firm, confident, calm, forthright, and objective. Listen to the question, answer to the questions alone. You are not there to volunteer information. Investigations are investigations. Always be mindful that saying more than what is required would invite more questions. Those who ask questions would ask questions and you would answer to them. If they want to ask more, they would ask more. Cooperate with the investigator always. At the same time, you as an auditor have the responsibility of being confidential also. So confidentiality clause requires you to cooperate with investigators where it is required. So therefore, you are required to answer to the question and not to volunteer with unwanted information. And also, chartered accountants are not required to explain things beyond what is required by any authority. Always anticipate more questions. Friends, already it is 6:50. I thought of talking up to for 1 hour and 45 minutes, but I have gone beyond 5 minutes. And I thought I would leave last 10 minutes to friends, anybody who wants to ask any questions. This topic is vast. By God's grace, I have tremendous experience in the subject, so I can answer the questions if you are specific.
So there are 3 questions in Q&A.
Okay. Can I see that?
Yes, sir, please. You can see.
First question is regarding the resignation of auditor. What all documents can the incoming auditor seek from the company under rules before accepting, in addition to NOC from the previous auditor? I think he's asking the question of resignation of auditor. Resignation.
Unmute कर दो सर को आप.
हाँ सर, अनम्यूट कर दिया. दीपक आचार्य जी, आप क्वेश्चन पूछ सकते हैं अपना.
Thank you, Devendra ji. Thank you, Sajan sir. I think in case of a resignation of an auditor, so there are the 2 critical questions that this unpaid fees and you know, related. So how? I mean, what access or what powers do we have? You know, for these specific, how do we make sure that we are the incoming auditors?
No. Look, the question, we have to address this from the angle of clauses 8 and 9 of the first schedule, part 1. What these two questions are telling, clauses are asking is, number 1, you need to ensure that the appointment requirements as per the law have been satisfied. Now, if a person's term of appointment is over, suppose 5-year term is over as per the current rules, then naturally he is not supposed to be reappointed unless the company decides to. So the point is, if the person himself is resigning, then the questioning is over. Now, the only thing is that you have to see that whether the company has convened the general meeting and the appointment has been done. You have collected the board's resolution, the shareholders' resolution, and the appointment letter is collected, and all those things are there. So companies' records have to be examined. That's all. Or you take an extract of it. And so far as the outgoing auditor is concerned, he has already resigned. No? So naturally, he has no qualms. Only thing is he has to be paid. So pay him. That's it. And ask for send a letter to him. And if he has no right to object to your appointment anyway, but he may communicate something to you, and keep in mind those information for the purpose of your audit. That's all.
That's fine, sir. But I'm just relating it to the code of ethics that I cannot accept an appointment in case there's undisputed fees pending.
That is there. I told you that.
Okay.
That is there. So far as the undisputed fees is concerned, yes, you have to get paid. It is your duty to pay. See that it is paid. Your outgoing auditor should be paid. No? So as an incoming auditor, it is your responsibility to see that, persuading the company and making the payment. That's it. When you are taking the job as an auditor, you have the persuasive power with the company, and you should tell them that, look, this amount is undisputed because it is coming as a provision, so you pay it. And if it is not a provision in the books of account, it is not undisputed, it is disputed.
So that is right. But if you see the code of ethics, I cannot accept. So till I accept, I'm not the auditor.
See, acceptance means he is sending you an appointment letter, and you are telling the company that, look, appointment letter I have received, but I would send you the acceptance only once you make the payment. And ask them to make the payment, then accept it.
Exactly. Right.
Okay.
So the next issue is regarding the disclosures. I mean, if there is no pecuniary loss or a financial loss or a expected fraud, in case of disciplinary proceedings or the regulator, taking up the auditor, I mean, does it have to show or demonstrate that there has been a loss to the exchequer or the government, or a fraud has perpetrated due to this incomplete disclosures?
The requirement of a disclosure arises from a particular material misstatement aspect or a probable loss. No? So unless and until there is evidence to the effect that there are some losses that would be arising, how can there be any requirement of a disclosure? After all, disclosure requirement comes up based on some certain facts. No? So those facts have to be linked to the requirement of the accounting standards. For example, if it is linked to AS 29 or something else, then only it can happen. No?
If I specifically talk about AS 17, there has been a limited disclosure of the segmenting, and the auditor has not reported. I'm talking about this situation. Then what happens?
AS 17 is segment reporting. So segment reporting means what? We need to have if there were any geographical reporting required, whether you have altered it or not, number one. Number two, segment profits, segment assets, segment liabilities have been shown or not. So these are mandatory disclosures as per AS 17. So long as AS 17 disclosures have not been done, it is not even not required to be material, because so far as disclosure statements are concerned, the institute's position is very clear. Regardless of whether it is material or not, if there is a disclosure requirement as per the accounting standard, if that has not been complied, it's violation of accounting standard. So violation of accounting standard must be reported by chartered accountants.
Okay, thank you, sir.
Okay.
One question, Devender ji, if you permit me, just one more clarification. Sajan sir, regarding code of ethics again, on the fees, that quantum, that 15% restriction.
That has been buffered for the time being.
Okay, but is it talking about the gross revenue receipts of the firm or only from assurance services? That is my small little clarification.
No, it is gross revenue.
Thank you so much, sir.
Okay. Any other points, brothers?
There is one more question, sir.
There
are two more questions in Q&A.
Okay, two more. Okay.
Devinder, unmute.
I have already, Karthikeyan sir, you can ask your question to Sajan sir.
Karthik, please. He's not. I can read. I can read it. I can read. I can read it. Checking that there is no pending audit fee payable in books would be a considerable check, I guess. He is giving an answer, I suppose. It's not a question. He's just giving an input. I have already said that undisputed fees means fees in the books of accounts. That's it. So he is confirming that point. There is no dispute on that. The last is Nalin Kumar Noria. Sir, as per the Code of Ethics, I am required to keep copy of correspondence made to the various authorities where I am acting as authorized representative. See, if you have been signatory, then naturally you will have the copies. No, what is the dispute on that? You should keep it. What is the problem? But anyways, my point has always been, even if you are an authorized representative need not necessarily sign all documents. Of course, you are representing before the authorities. But if you are preparing documents and signing on behalf of the entity, then keep the copy, so that because tomorrow if somebody is asking on what basis have you made it, then you should have the copies at least to refer to. So I think you are done with all the points, I think, Arunji.
Yes, sir. Yes, sir.
Rajesh ji.
Yes, sir.
Back to you, sir.
Okay, sir. Sir, Sajan Saab, it is a grateful session from you regarding Code of Ethics. So I first thank you on behalf of Northex CA Studies Circle, together with our brother senior member Shri Arun Kumar Gupta ji and Ashok Gupta ji and Raman Gupta ji, for your great session. I think code of conduct will be clear to all the attendees, sir. So again, I will thank you very much, sir. Kindly accept our memento. We will deliver you at home, and accept our bouquet flowers, sir. Thank you very much for sparing your precious time, sir. Thank you, sir.
Thank you so much.
Thank you so much, sir.
Thank you.
Bye.
Thanks, sir.
Bye.
Thanks a lot. Thanks a lot.
Thank you, sir.
यूजफुल होगा ना प्रोग्राम? यूजफुल था कि नहीं था?
सर बहुत बढ़िया लगा, हमें बहुत कुछ क्लियर हुआ जी कि हमें कुछ गलतियां हम कर रहे थे वो हम आगे से नहीं करेंगे, सर. इट इज वेरी प्रोडक्टिव प्रोग्राम, सर.
इजाजत दीजिए जाने के लिए. थैंक यू.
ओके सर, थैंक यू सर.
Sir, still 200 attendees are there.
200 attendees are there. That's very good. That's a good participation. But सब लोग सुन रहे थे या म्यूट करके चले गए थे क्या?
नहीं, सब लोग एक्टिव थे, सर.
ठीक है. Thank you so much. Okay, bye.
Thank you, sir.
Thank you so much, sir.
Thank you.
मेंबर्स के लिए एक अनाउंसमेंट है कि हमारा जो नेक्स्ट प्रोग्राम है वो है ओवरव्यूज ऑफ अकाउंटिंग स्टैंडर्ड्स, इंडियन अकाउंटिंग स्टैंडर्ड्स एंड रिलेटेड अकाउंटिंग स्टैंडर्ड्स. स्पीकर हैं सीए आलोक गर्ग जी, और प्रोग्राम है 12 मार्च को, सैटरडे को, शाम को 5 से 7 जूम पे. तो आई रिक्वेस्ट टू ऑल मेंबर्स अटेंड दिस सेमिनार, sorry, VCM, and thanks to all participants. Thank you, sir. Thank you, Arun sir. Thank you, Rajesh sir.
Thank you ji, thank you, Arun ji.
Yes, sir.